Mari, and this is Forex 101. Now it's time to discuss one of the most popular trend indicators known to man. Let's jump straight into the moving average. The moving average is a trend indicator used to represent the average closing price of the market over a specified period of time. It's based on past prices and discloses the trend direction of the market. It can also be thought of as a moving support and resistance level. Let's apply this to a live chart example to get a better idea of how we can use this tool to gain an edge on the market. All right, you guys, so we are here on tradingview.com, and I'm just going to be giving you guys a quick rundown on the moving average. All right. So first off, I do just want to point out that I did go ahead and change my candles from Japanese candlesticks to Hakanashi candlesticks, just because you guys know I prefer how it looks on my chart. I just think it makes the chart look a lot cleaner. So in order to go ahead and add our moving average, all we're going to do is come up here to the top where it says indicators, you guys. We're going to click this tab and we are going to type in moving average. Okay. So right here at the top, you guys see I have this indicator actually saved as a favorite because I use this indicator all the time. I'm going to go ahead and select it, which has now added the moving average to my chart. All right. So if you guys are wondering what the moving average looks like, it is this little blue line that you guys now see going through my chart. Okay. So what I'm going to start by doing is showing you guys how to actually change the inputs for your moving average. So now that I have the moving average added here to the chart, I'm going to scroll up here to the top left where it says MA, and you're going to see the I, the settings button, some other kind of things. And then I'm just going to go over and select the settings tab. Now here in the settings tab, this is where I can actually change the inputs for the moving average. So the purpose of this moving average, you guys, is that I wanted to tell me the overall trend of the market. All right. So since I want to know what's going on with the overall trend of the market, I'm going to make the length of this moving average 200. Now, you guys, when I set the length as 200, that means that this moving average indicator is going to take into account the last 200 candles when calculating the average price. So I'm going to go ahead and leave the source as closed. The offset is 0. I'm really not going to change anything else here besides the length. Now for the style, I'm going to make it, let's make it white, just so we can see it clearly on the chart. And I'm also going to make my line thicker. Okay, so now we have made the line thicker. Let's see, is there anything else? I don't think there is anything else I want to edit here, you guys. So I'm going to go ahead and just press OK. So now that we have the moving average here, we can now determine the overall movement of price. So as stated before, the moving average can also be considered a moving support and resistance level. As you guys can see, price actually broke through the moving average here, right? Then it came up and retested this moving average as a level of resistance, right? And when it couldn't break through, it continued to push down. Again, it came up and tested this moving average as a level of resistance. When it couldn't break through, it went ahead and pushed down. And on this final time, it came up to test this moving average as resistance again. But this time, it broke through. And now you guys can see price coming down to test this moving average as support. So with that being said, I can tell that price is currently buying because you can see that our candles are currently above our moving average and is currently testing our moving average as support. Now you can even move up to the daily time frame, you guys, and see the overall trend of the market on higher time frames. So if I move up to the daily, again, I can see that price in the past has broken through our moving average, and it is now coming back down to retest our moving average as support. Now, if price continues to respect our moving average as support, that means it's just going to continue to bounce off of this moving average as support and continue moving in the upward direction. Now, on the other hand, if price tests this moving average as support, but ends up breaking through, we will then know that price is in a downtrend, and we will then wait for price to come up and retest this moving average as a level of resistance before entering in on the continuing move down. So now that I have showed you guys how to use the 200 moving average to determine price direction and the overall trend of the market, I want to show you how to use some smaller length moving averages that will help you determine when to actually enter or exit a trade. So let's go ahead and scale down to the 30-minute time frame. And on this 30-minute time frame, I'm going to go ahead and add 2 more moving averages. So all I have to do is tap moving average twice. 1, 2. And now I have 2 new moving averages here on my chart. Okay. So I'm going to exit out of this. And let's go ahead and change the inputs on these new moving averages. So the first moving average, I'm going to make the length 4. And then I'm going to change the color to this bright yellow so that I can see it. I'm also going to make it a little thicker. Yeah, that looks good. Let's go ahead and save that. And then we're going to move on to our third moving average. And for this one, we are going to change the length to 10. Okay, and now that we have the length changed to 10, we're just going to change the color of this line to this light blue here. And we're also going to make this pretty thick as well, just so we can see it. Let's go ahead and press OK. And boom. All right. So I don't know if you guys can see, but our first moving average is yellow. This one is going to be a little bit harder to see because this is going to be the one closest to price. All right. This is going to be the one actually representing price for the most part. And then we have our third moving average that popped up here. We changed it to the color blue. And this is going to be our, basically our signal moving average, you guys. So this is what's going to let us know when we should be entering and when we should be exiting our trades. So it's just this simple, you guys. Let me zoom in so you can see exactly what I'm talking about. When you see the yellow cross above the blue, that is a buy signal, okay? And vice versa, when you see the yellow cross below the blue, that is a sell signal. So let me go ahead and put that on the chart for you guys. Blue over yellow is equal to a sell. Yellow over blue is equal to a buy. All right, you guys, it's literally just that simple, okay? Blue over yellow, right? Blue over yellow, sell. Yellow over blue, right here. Yellow over blue, buy. Now, you guys may be wondering, where does this white moving average come into play, right? Where does our 200 moving average come into play now that we have our 4 and our 10 here on the chart as well? Let me show you guys a really simple trading strategy, okay? This is just how simple it is for you guys to create your own trading strategy. You can use one indicator like this, the moving average. You can just use multiple, or you can use multiple different indicators, okay? But let me show you how I would use all 3 of these moving averages together. So here at this very moment, we can see we had our candles, right? Which represents price, right? Our candles represent price. It's currently underneath our white line, right? Remember that this white line is our 200 moving average. Now, let's go ahead and set this rule over here to the right as well so that you guys can remember when price is above white line, you are looking for buys. When price is below the white line, you are looking for sells. All right? It's literally this simple. So we have our white line currently above price, right? When price is below white line, we are looking for sells, right? We got price below the white line. So that means we're looking for sells. So what is an indication of a sell when it comes to our smaller moving averages? For a sell, we want to see the blue over the yellow, all right? So you guys, once we get price to come below this white moving average, this 200 moving average, once it's below there, we want to actually start to take a look at our yellow and blue moving average. Since we know that price is below our white moving average, we know that we should be looking for sells. So that means that we should only be looking for opportunities where the blue line is above or over our yellow line. Okay, so as soon as I would have saw right here, you guys, I'm gonna zoom in. As soon as I would have saw our yellow line crossing below our blue line, you guys, this would have been a perfect indication for me to sell. Now, you guys, I would not just let it cross and say, oh, I'm going to get in. No, I want it to cross and I want this candle to close. Once this candle closes, that lets me know that this thing is now solidified and it is stuck, okay? The cross is official at that point, okay? So let's just say I would have gotten in here once the official cross happened and just stayed into the bottom of this trend. I would have made a little bit over 30 pips on this trade, you guys, all right? Now, depending on what you're leveraging, that could have been $3, $30, or $300, okay? So that's a lot of money to make on just such a small move within the market. Now, you guys see, after we got this push down, right, we got this cross up as well. Now, this is the thing, you guys, even though we got the yellow crossing over the blue, that does not mean we get in for a buy here at this point. Why? Because remember, price is still below our 200 moving average. As long as price is below this 200 moving average, we are only looking for sells. Now, when price crosses above, like so, now we want to start to look for buy opportunities. All right, so you guys can see we had this really big buy. We have price pulling down now to retest this area. If we can get a cross up, you guys, if we can get our yellow to cross above our blue now at this point, this will actually be a buy signal for us to get into. Now, I do want to point out to you guys that there are a couple different types of moving averages that you can use. We have these moving averages that you see here on the screen. These are actually called your simple moving average, otherwise known as the SMA. So you guys, this is what we're working with here on the screen. We're working with simple moving averages. Now, I want you guys to know that there's another moving average that you can utilize called the exponential moving average. All right, this one right here, moving average exponential. So I can easily click this and add it onto my screen as well. I know you guys can see the little small blue line following through there. So now what I want to do is actually go ahead and erase these simple moving averages from the chart. And I want to just go ahead and add on a couple of exponential moving averages. All right, so we're going to keep our 200 simple moving average. All right, but we're going to remove our smaller moving averages. All right, so now in place of those two simple moving averages, I want to go ahead and add two exponential moving averages. All right, so I'm just going to go ahead and click this twice. 1, 2. And now we have two new exponential moving averages here on the screen. As you can see, it says EMA. EMA. So I'm going to go ahead and exit out of this. And let's go ahead and work on these EMAs. So I'm going to select the settings tab for the first one. And for the length, I'm going to change this one to 4 as well. For the style, again, we're going to make this the color yellow just so we can see it cutting through price, and we're going to thicken the line. Now for the second exponential moving average, I'm going to change the length to 50. And then I am going to change the style, the color of it, to orange. And I'm just going to edit the thickness as well. So now you guys can see we have our 4 exponential moving average cutting through price, and it's represented in yellow. Then we have our 50 exponential moving average, and it is represented in orange. Now, you guys, you would use this strategy in pretty much a similar fashion, but let's move up to a higher time frame. All right, so we are here on the daily time frame now. So let's just talk about it, you guys. It's literally going to be the same exact thing. So we have our 200 moving average. We know that if price is above our 200 moving average, we are looking for buys. And if price is below our 200 moving average, we are looking for sells. So in this case, we have price above our white line, our 200 moving average, letting us know that we are looking for buys. So again, in this scenario, if we have the yellow above the orange, that is a buy signal. And if we have the orange above the yellow, then that is a sell signal. So since we have price currently above our 200 moving average, we are going to be looking for buy signals, which means we're going to be looking for the yellow line to cross above the orange line. So if you guys zoom in, I'm going to zoom in right here. All right. we can see we had the yellow line cross above the orange line, right? And then price just continued up, right? We had price come back down and retest our 50 exponential moving average. It could not break through, so it continued pushing up. Came back, retested again, could not break through, so it continued to push up. Then finally, we had price come and test it again. It broke through and then continued down to our 200 moving average, right? And then that's when we can see that price kind of started to consolidate. So again, these are super easy, super simple to use. This is one of the most popular and well-known indicators for a reason, you guys. Especially as a beginner trader, this is a great tool to help you kind of determine the trend of the market, as well as find good entry points to get into a trade. You can also use these moving averages as an exit strategy, you guys. Me personally, I don't use them that way just because you can tend to lose quite a few pips just by using them as an exit strategy. So I actually personally prefer to use this more as an entry strategy. Now, I did go over the regular simple moving average as well as the exponential moving average. And before I let you go, I just want to tell you a brief difference between the two. So the primary difference between the exponential moving average and the simple moving average is just the sensitivity each one shows to changes in price movement. The simple moving average will calculate the average of all price data, while the exponential moving average gives more weight to current price data. So again, the simple moving average takes into account all of price data all the way back to freaking 1986, if that's how far the chart goes back. However, the exponential moving average kind of prioritizes more recent price data, okay? So yeah, you guys, that pretty much wraps up this training on moving averages. I hope you found this helpful. If you have any questions, you know exactly where to reach me, and I'll see you guys in the next class. That concludes this lesson. If you have any questions or remarks, please join my discussion board and make them known. Feel free to follow me on social media and leave this emoji under a recent post for a follow back. Thanks again for tuning in to Money with Mari, and I'll see you on the next episode of Forex 101.